if you could please type a wire yes in the question section. Verify that. That would be awesome. I am excited to be here. Awesome. Thank you, Richard and Mark. Good to see you. Irene, John, Joelle, Joseph, Peter, Karen, Robert. Awesome. Perfect. We got a lot of people in here today. I'm excited to be here. As we get going, I want to make sure everybody also understands the risks involved and associated with trading and investing. Please be aware of those risks, willing to accept them. Also understand I am not a commodity traded advisor. What that means is I'm not here to give you advice. I'm not here to trade for you. I am, however, here to teach, to show, to guide, educate, mentor, help you on this great journey of hopefully becoming a very profitable, successful, professional trader, right? That's the whole goal. That's the reason why we're here. I want to invite you guys, if you haven't yet, I want to invite you to go out and like me on Facebook. So hopefully you have. If you haven't, well, then now's your chance, right? Go out there. It's facebook.com/TylerTrader. Try to post things on this page. I haven't been real active in the last week and a half. Last week and a half, I've been at the corporate office in Florida. The weather was awesome down in Florida. It was just absolutely great. And then I come back home yesterday, and I come back home to like 35 degree and cloudy. It actually snowed a little bit, a little tiny bit. We didn't get any accumulation, but snowed a little bit in Minnesota. Can you believe that? How ridiculous is that? That's crazy. That's what we're putting up with here in Minnesota. It's nuts. I can't stand it. Yet I say that, I complain every single year, and what do? I still live here. I still live here. Anyway, all right. So again, if you haven't yet, excuse me, I want to invite you to go out and like me on Facebook. Gerald says, get ready for more. I hope you're wrong, Gerald. Man, I hope you're wrong. I haven't looked at the weather forecast lately, but oh, jeepers, I'm about sick of it. Good thing I literally probably drive about 20 miles a week to the gym and to the store and back, but so I do a lot of driving. But ugh. All right, without further ado, let's dive in. The title of today's webinar is A Veteran Trader Reveals Historical Trading Patterns for April. Well, that is true, somewhat true. We're going to reveal and go back and recap what happened in April, and then we're going to try to set ourselves up for a phenomenal, absolutely home run May. Type it in me if you want to make thousands, potentially 5, 6, 8, 10,000 pips or more in May. You might be like, well, geez, is that even possible? Can that even be done? Yep, it can. It can. And the plan is that I want to do that. I want to count me in. Let's set that up, right? William says that'd be terrible. Yeah, what a terrible month. 10,000 pips. Come on, Tyson. Why not 12,000? No. All right, let's get going. I want to start with the dollar yen. I posted this dollar yen trade on my Facebook page yesterday, and one of the main reasons I posted it on is because I'm a big fan of looking at historical price reactions around certain events, around certain things. And the Bank of Japan came out with the monetary statement, monetary policy last night, actually early rolling into today, really early this morning on the East Coast. And historically, this has been a reaction, or this has been one of those reports that has kind of confused traders, because over the recent years, the Bank of Japan has come out with very dovish, very easy policy, easy money policies. And usually, you know, if we're thinking about this fundamentally, what that would mean for the most part is traders believe, well, that means that the Japanese yen should inevitably be weak, right? Type in a wire yes if you agree that if a central money central Fed, or the Fed equivalent, is coming out with easy money policies, that means that the currency of that country should potentially be weak, or for the most part be weak. Yeah, and Michael typed something in. It says it hasn't worked that way. Well, I'm going to explain the reasons why it hasn't worked that way, and I'm going to try to do this in a a way that doesn't confuse you, and I don't want to dwell on this a lot, but one of the main reasons this hasn't worked is because there is still a lot of fear in the markets. Even though the U.S. stock market, the worldwide really equities markets are trading near or at all-time highs, there's still a lot of concern on whether we're truly growing the way we should be growing. And for decades, not just over the last few years, but for decades, Japan has been in a very low interest rate, easy money policy. In fact, they've been the easiest, cheapest money to borrow anywhere in the world for like 2-3 decades. So if you wanted to go out there and borrow really, really cheap money, you would borrow from Japan. And it's very smart money, know that. So what the smart money have done for literally decades is they've went out and they've borrowed trillions and trillions of yen. And the reason they went out and bought trillions and trillions of yen is because they wanted to buy or borrow them at very cheap interest rates, pay almost nothing to borrow them, and then they would take that money, take those yen, and buy risk assets such as the U.S. stock market, other currency pairs that will pay them higher interest, houses, different things like that. It's called the an interest carry trade. I take advantage of a low interest rate, and then I put that money that I borrow into something that's going to generate a higher interest rate. Type in a wire, yes, that makes a little bit of sense. It's kind of like thinking about this in housing. Some of you might understand this a little bit better in housing. Let's say I move into an area that has a historical appreciation rate of like 7%. There is no guarantees it's going to continue to, the house are going to continue to appreciate at 7%, but I'm like, wow, this is a really nice area. Well, if I can go to the bank and I can borrow money for 30 years at 3.5%, and let's say I get 7% on annual appreciation, well, that's an arbitrage. That's a carried interest rate. I'm taking advantage of one low interest rate and swapping that to buy a risk asset and hopefully get more appreciation. Same thing happens in the yen. So the yen essentially has been the cheapest borrowing asset out there. So I go out there, if I wanted to put money to risk, I'd go out and borrow a bunch of yen. And the problem that's happened is the entire world is in kind of an oxymoronic, stuck between a rock and a hard place type of economy. The Japanese Bank of Japan, they've come out and they've continued to do quantitative easing. They've continued to talk about purchasing and continue to talk purchase bonds and talk about how their economy isn't doing that well. Well, what that causes is that causes the entire world to pay attention and say, wait a minute, if an economy like Japan isn't growing, that then makes us a little concerned that other economies around the world might not be growing like we think. And it makes me think twice. If let's say I borrowed, let's say 2 years ago, I borrowed a bunch of yen and I bought a bunch of stocks or houses. Well, now it makes me think, well, what if the economy is not growing that much? Now, is it worth it for me to keep the money that I borrowed and continue to be in these risk assets, or is that risk maybe becoming too high? Again, let's use housing as an example. Let's say the reason why the house that I bought appreciates at 7% annually for the last 20 years is because there was a big manufacturing company in the town. And that manufacturing company historically has been producing great jobs, high-paying jobs, and it's been a really, really nice factory for the town. In fact, I'll give you a true story that's happening right now near my hometown. My hometown is in Iowa, and there's a factory that a lot of individuals from my hometown work at with Polaris. They're a manufacturer of recreational vehicles, four-wheelers, snowmobiles, different things like that. They are laying off and closing down one of their major plants in Iowa. Well, that's going to cause a major disruption in that economy down there. Yeah, and it's a sad thing. It's sad, but so if you move to Spirit Lake, Iowa, over the last 10 years, 15 years, your home price appreciation probably has been pretty good because there's been some manufacturers around there that have supported those prices. Incomes have continued to rise, and it's been pretty decent. But now you've got a pretty major employer laying off 300, 400, 500 decent paying jobs around that environment. And so therefore now, let's say I owned a house let's say I owned a house in Spirit Lake. Well, now I'm thinking, and let's say it was an investment house. Now I'm thinking, uh-oh, my house probably isn't going to appreciate like I thought it was, because now those jobs, those high-paying jobs are going away. So I might think about selling my house now because now there's more risk. And that's really what, when Japan comes out and they start talking how things aren't really that good, they got to continue to support low bond yields, low borrowing costs, it makes the market wake up and say, uh-oh, should I start buying back? Should I start paying back my borrowed yen because things maybe aren't that good? And that causes a big rally in the Japanese yen. It's called the Japanese yen carry trade unwind. And I don't want to bore you with it, but it's a sign that there's some fear in the market. Anytime there's fear in the market, if we get a big geopolitical risk shock, if we get any type of financial, let's say some financial bubble burst that we didn't know was going on, then the safest place you will end up being is along the Japanese yen. I just want to make sure you guys understand that. The number one safe place to be for now in the foreseeable future is going to be long the Japanese yen if and when the economy worldwide falls apart again. Yeah, absolutely, long. And the reason why is because there will be a mass exodus out of risk. There'll be a mass exodus out of the stock market, out of real estate, out of commodities. And what are they going to cover? Well, when I'm afraid, like I bought that house, now I'm afraid that my house isn't going to appreciate and I want to get out of it. Well, I'm going to sell my house and I'm going to pay back my loan, right? The same thing happens in the yen. I'm going to sell my risk assets and I'm going to pay back my Japanese yen that I borrowed. And it's called the unwind of a carry trade. And it has a big trickle effect. So anyway, with that said, Japan continues their low interest rate, their easy money policy. Inflation is somewhat subdued, and it's really been subdued around the entire world. And so therefore, this is historically, over the course of the last few years, this has been a sell the news type of event. Anytime the Bank of Japan has spoke, within the next couple weeks to month or two afterwards, the market typically sells off. And I believe the same thing is going to happen now, especially when we can tie it back to technicals. So that's fundamentally speaking that, just historically when the Bank of Japan comes out, it's typically a sell the news type of event. And from my standpoint, the risk in this market is to think that we're going to continue to grow to levels that are continue to rally to levels that we're rallying to and continue to expand upon on this rally. Unless everything goes perfectly in the economy, and I'll just take the U.S. for example, unless everything goes perfectly with Trump's tax plan, the 15% corporate tax rate goes through, which, trust me when I say this, I am absolutely ecstatic for that, because I personally am a subcontractor, and that I would love my tax rate to go down to 15%. That would be huge. That'd be huge. And so that would be great. But there's a whole lot of stuff that I don't necessarily think is going to get passed through. Not only that, but let me ask you a question. You've heard the saying, buy the rumor and sell the news, right? Type in a wire yes if you've heard that saying. Okay, so buy the rumor, sell the news. How much of what Trump is potentially going to do, or what he said he's going to do, how much of it is known, right? Everything's known, right? The market knows all of it, knows everything. The market knows all of the best case scenarios, right? What we don't know is we don't know the potential worst case scenarios. Type in a wire yes if that makes sense. We don't know. We know the best case scenario tax plan. Trump just showed his cards. Here's the best case scenario. And the market says, okay, great, we'll take that in strides and we'll see. That's the reason why the market's rallying. Now, that's your best case scenario. What if that best case scenario, and most likely it's not going to come to fruition perfectly, what if? Then I'm telling you there's going to be profits taken, because right now people are positioning for the best case scenario. So they're buying the rumor. This is going to be a very classic buy the rumor, sell the news event. It just is. It just is. Not even including the geopolitical risk that we have going on. Do we have any geopolitical risk going on? Do we have any speaking for America? And listen, I'm an American, so I get it, but Have we created some tension? Is there tension in the world? I mean, there is. There absolutely is. And so, you know, I just want you guys, this is kind of my public service announcement. Yeah, debt limit, holy smokes, talk about craziness. I just want you guys to understand that we right now in America, and I think in the entire world, we are stuck between a rock and a hard place. It is not going to be good, because here's the thing. If you guys might say, hey, wouldn't it be so awesome if we get these tax cuts and then the economy starts to grow at 4%, U.S. economy starts to grow at 4%. Well, watch out for what you wish for, because if the U.S. economy starts to grow at 4%, then inflation is going to start ticking up very aggressively, right? Type it a wire, yes. Because what happens, incomes will go up, inflation goes up. What happens when inflation goes up? Interest rates have to go up, right? If interest rates go up to a certain point, it's going to bankrupt America, because we have trillions and trillions of dollars of debt. We are not in a good situation here, guys. The only way we grow ourselves out of this is not just 4%. I think we need like 6% growth, which is never going to happen, to grow ourselves out of this. Because we can't have too much growth. If we have too much growth, then inflation's going to go crazy and we can't pay our bills, because interest rates, it's going to bankrupt everybody, because my house will appreciate, you know, we'll go from $400,000 to $3 million in a year, and nobody will be able to afford it, because that's craziness. We'll go to crazy levels, and it'll bankrupt everybody plus our country. So we can't grow too much, but we can't grow slow either. We are right now. We got to hope that we stay in this sweet spot of 2.5% to 3% growth with minimal inflation, and people stay kind of somewhat skeptical of the economy, because if they do, then guess what? We can stay in this kind of boiling frog state for a while. But you know what happens when you boil a frog? I don't know this, I just heard, right? When you boil a frog, the frog gets really comfortable in that water. Like, oh, this is nice. It's kind of like a bath, right? And eventually the water gets so hot that they die, because they don't even realize how hot it's getting. Oh, it's so nice. It's so comfortable. And boom, all of a sudden the frog's dead. They didn't even know it. Dead. I believe because of debt, and because of, I think debt is going to crush this entire world economy. Personally, that's just me. Now, how do we make money from it? Tyson, okay, how do we make money from it? Hopefully, sometimes I know, sometimes a lot of you like, oh, for sure, Chris. All glory, my man. So, how do we make money from this? And hopefully you guys sometimes appreciate when I kind of go off on those things. It's right now, I think it's really important for you guys to protect yourself. Lib says, Ty, I didn't know you were a liberal. Oh man, listen, I have nothing against. I'm not going to get political here, but I am not a liberal by any means. I'm a very, I don't want to say very conservative person, but I'm also a realist. I also understand what we've done, and I'll tell you what. Extreme liberalism becomes socialism, and communism, and extreme capitalism becomes corruption. That it always happens, and I don't know where we're at right now in that grand scheme, but I think we're kind of we're really close to one or the other, maybe close to both, right? Okay, so here's the deal. How do we take advantage of this? Well, one of the things is this: is I want to. I don't want to trade my opinion, right? I don't want to trade my opinion. So everything I've just said it's based on facts, right? Japan is the lowest borrowing cost, which means there's most of the money that's borrowed is borrowed against Japan, meaning that, you know, if things start to get bad, then the Japanese yen will rally because people will look to cover their yens. It will continue to rally. So that's fact. But I want to tie those things with, yes, for sure, socialism leads to corruption. Corruption is what ends it all, and then a revolution happens, and then we start over, and that eventually leads to corruption too. But anyway, so we've got this down AB. So now, if I could tie all of that back to technicals, then I've got something really nice, right? So now let's talk about the technical side. So I set up a little bit of a fundamental picture. Let's talk about the technical side. So the technical side here on the dollar yen is we're in this down AB. We've got a retracement. We barely put in our retracement, but we still have our 382. And so if I'm looking at this down AB here with the retracement, and I look at this down AB with the retracement, then type a wire yes in the question section if you agree that our next thought process, whether you agree with where I stand fundamentally or not, our next thought process should be that price is moving in these A, B, C, D wave movements down, right? We got A, B, C, potential C. This C might go deeper, but A, B, C, D. A, B, and the fact that these D extensions here, this A, B, D extension is within, you know, I mean, we're talking 60 pips away from this sub A, B, C, D extension. And so this here is a beautiful setup. It's a gorgeous looking setup. And this is also fundamentally speaking, and seasonality says we should look to short too, because anytime if you went back and looked at the responses, in fact, I did this on my Facebook page. I'll show you here. So here's the responses from the last 4 Bank of Japan meetings. Bank of Japan, sold off. 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 Again, what do we think is going to happen right now? Just looking at it seasonally, just looking at what Bank of Japan, sell off. Plus, we have the technicals working in our favor. Okay, so, and this is also a very, 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 very bearish daily bar that was just put in right here. This is a spinning top. There's all kinds of stuff we can call this. Tweezer top, spinning top. It's a key reversal bar. It's technically not a perfect key reversal bar. A key reversal bar would be, I guess it's an engulfing reversal, because we had a bearish close. We pierced the top. We pierced the bottom. So this bar totally engulfed the bar before, and it had a bearish close. This is an extremely bearish bar right here. Just know that. So everything is working kind of in our favor for this trade. So this is my trade. I want to short. I'm already in this trade. If I weren't in this trade, then what I would do is I would look to short on a break below 110.87. My target would be 107.40. My stop would be 112.30. My target is going to be down to this this AB. We got an 8.6, the 118 extension down to 107.40. Type in a wire, yes, if that makes sense. Daniel brings up something good. Says actually something that I agree with. Daniel says the dollar seems poised to rally. In fact, hey Daniel, it's nice to see you. I haven't seen you in a while in these webinars. It's good to see you back, my friend Daniel. It's always good to see you in the webinars. Anyway, so yeah, I agree. The dollar actually is going to set up eventually for a nice rally. It is. But here's the deal. Let's look at the dollar itself for a second. And what we're looking for in the dollar, and we've been looking for this for a while, is right here. This right here is the major AB sequence on the dollar. Does anybody notice something interesting on this AB sequence higher on the dollar? We have no 382. The one thing that's working, I guess, in the bullish favor in this right now, it's a short-term bullish move that I believe we have. But the one thing that's potentially working in the favor of this, and it's going to be short-lived, is this down AB right here. But this down AB is going to have a hard time getting past this bear crown that's setting up right here, right? That's going to push us down to where? To finally fulfill this 382 retracement. Type in a wire, yes, in the question section if you see that. And the crown is right. You can barely see it. It's an awkward looking crown, but we got, and not only that, but this is, what is this? Right tip, center tip, left tip, and then we've got this weird looking crown right in here. Bottom line is this. What we've got is we've got price rallying up ever so slightly to the 382 of this minor down, and then we're going to push lower. So price is going to go like this. It's going to go A, B, C, and then it's going to have that next push down, and it's D. We're going at least down to 154. So this right here helps us if we're looking for a continued push down. And remember, for every point in the dollar index equals about 2 points in a currency pair. So if price rallies to 12,308, because that's a 382, and then falls, so from 12,308 minus 12,154, so 12,308 minus 12,154, that's 154 dollar index points. If I times that by 2, that's 308 pips on a currency pair to the downside. Does that help support our case down to 107.40 on the dollar yen? Yes or no? Yeah, absolutely. That's almost spot on, right? Yeah. So Daniel, I actually agree with you that the dollar, I believe, is going to soon be bullish, but just not yet. So, but I do agree with you that it's soon going to be bullish. Okay, so this is a phenomenal move. This is great. This is awesome. I'm going to show you guys in a second here. I'm going to go through a bunch of trades, and then I'm going to show you how I'm going to turn all of these trades in double, triple, maybe even quadruple my profits all the way down to this level. In fact, let me show you that right now, and then we'll go through all the trades. So this trade right here has about 340 to 350 pips worth of reward in it. I love this trade. Now, how many of you have heard of Josh's grid trading course? Type it in me if you've heard about it. I want to talk about this because I'm going to show you how I want to set this up. There's 2 ways that we can decide to trade this. One, we can trade this as a normal technical trade like this. I could short on a break below 110.87. Nice looking trade here. Trade it down to this target, stop up here. This is a great trade. Or 2, I could trade it with the grid, and with the grid, I'm going to make an argument. Hopefully you guys will see this. My case that I'm going to build is that the grid will increase my profitability by 2, maybe even 3 or 4 times. It'll increase my probability of success, and it will save me time. I won't have to be in front of the screens. So let me show you this. All right. Let me explain it first. All right, so what the grid does, the grid essentially is a tool for us to get in, use a leveling type of technique, and really make sure that we don't have to babysit trades, essentially. We don't have to babysit trades. We don't have to, we want to define the 3 questions we're really trying to ask ourselves. Here's the 3 questions, and I think that if you can answer these 3 questions, you should trade all your trades on the grid. 1, what direction is the market most likely to move in next? 2, where is the market? What price is I'll say what price. What price is the market most likely to move to? Whoops, sorry about that. There we go. Likely to move to. And 3, at what price am I wrong? Say it another way, at what price is my stop, right? Type in a Y or yes if you agree that these 3 questions, doesn't matter what strategy you're trading, these 3 questions are really the main questions that we try to ask ourselves and need to be able to answer before we place any trade, regardless of what strategy we have, right? We've got to define, because we're not trading options. if we were trading options, we wouldn't necessarily have to figure out which direction, because we could do a directional trade. We could, do a neutral trade. Well, we have to figure out a direction. So number one, we have to know, okay, what is the direction we're most likely to move in? Number two is if we're going to move in this direction, and where are we most likely to move to? And number three, at what points am I wrong? Because there's got to be a level where I say I'm wrong. And so let me just kind of go over the grid trading idea first. And then I'll go over the grid trading, and then I'll show you the formula. I'll show you how I'm planning on trading it with these trades. So let me just give you the idea first. The idea is that the market consolidates 70 to 75% of the time. That's what the market does. It stays within a channel. As it goes to our targets, it doesn't just rally or sell off down to those targets. It waves to those targets. And a lot of times it'll sit there in a channeling formation before it goes to those targets. And so what the grid trader does, and the grid strategy does, it allows traders to essentially set up a grid. And I'm going to just do an example here. Let's say you were looking at a currency pair and you set this up where you thought the currency pair was going to move up to, well, let's type this out. So let's say you analyzed a pair and it was in this up A, B like this, and your target on this trade, we're going to say it's in an up A, B like that, your target on this trade is up here, right? And so you think we're gonna go up to that area. I'll expand this a little higher, like that. You think we're going up there because we're in this up A, B, and now we've got a retracement, and this looks like a pretty typical trade here, where we would bring in a counter trend line, let's say, and then once we start to break above this counter trend line, we would then start to buy. Type in a wire, yes, if this trade looks pretty typical, right? We'd start to buy, put our target up here, and our stop down here, right? That would be a pretty typical trade. Okay, so this trader, let's say this trader has a 300 pip target and a 150 pip stop, just hypothetically, right? Trader one, that's the normal technical trader, just takes normal trades, buys here, target here, stop down here, 300 pip target, 150 pip stop, hypothetically speaking. Well, what would the grid trader do? Well, let's say the grid trader decided to take the same exact trade, but instead, what the grid trader did is the grid trader decided to set up a grid that's 50 pips, or let's say 100 pips wide. So this would be a 450. So we'd have 1, 2, 3, 4. Yeah. So we'd have 4 of these grids. So we'll say 100 pips wide on each one of these grids, and the grid looked like this. Let's say you originally bought right there. The grid looked something like that, right? And now you took the trade on the grid, and every time that you came to one of these orange lines, you bought. But let's say that you took the trade and you had a normal target of 300 pips, just like the normal trader. The normal trader has a 300 pip target. Let's say you were a grid trader and you also had a 300 pip target, but you took the trade like this. You went long here, and then price then falls, and you go long again here, and then price goes like this. And I'm just going to map this out, and I want you to answer yes or no if you could potentially see price going. Could you see price waving up like that after this normal trader gets in? Could you see price maybe going through a pattern that looks like that up to that target? Yes or no? Yeah, I mean, okay, sure. That happens, right? Okay, so here's what the grid trader would have done. So the grid trader got long here and then got long again here. So once price rallies up, remember, the target's 300 pips. Once price rallies up and hits this level right here, well, the grid trader's already got 300 pips in the trade, because this trade right here would be up 100, we're going to say 100 pips because they're 100 pips wide. This trade's 100 pips. This trade's 200 pips. So right there, the grid trader would already book its first plus 300 pips on that grid trade, and then they would reestablish the grid plus 300 pips. So now the grid trader reestablishes the grid, does the same exact thing, and then gets back in and buys here, buys here. Actually, I'm gonna make this look a little better, but give me a second. Let's say let's say buys there and then it falls again. Buys there, buys here. Well, once again, by the time the grid gets up to this level here, the grid trader has another 300 pip target. Then takes the grid off, reestablishes. And let's say it comes down again. I just want to show you, just because we believe it's going to wave up to that target. Then the grid trader reestablishes, goes long again here, and finally rallies up. And what does the grid trader have once again? One more time, for the third time, has a, guessed it, 300 pip target. So in this example, and this is just a hypothetical example, but in this hypothetical example, the grid trader took the same exact trade with the same exact target and the same exact stop, had a stop below here, target up there. But the grid trader said, listen, I'm gonna set up a grid, and each time we get 300 pips total in the grid, I'm gonna take my profits off and reestablish the grid. So the grid trader had a 300 pip trade right here with a combo of this trade and this trade, had a 300 pip trade right here with a combo of that trade and that trade, and had an additional 300 pip trade right here, up 900 pips, 900 pips for the grid trader. How many pips did the normal trader make? The normal trader made 300 pips. Type in a wire yes if you can see that, and this is starting to make sense. So each time, so that's a good question. Uriel says, well, what if the A is breached? Then you potentially miss out or lose more. You can potentially miss out or lose more, so you have to understand Josh's risk management formula also. But let me ask you another question. If as a grid trader, you go up and you book your 300 pips right here, do you automatically have to put the new grid on? No, the reason why this is going to increase your probability of success is because as you go up and hit your 300 pip target, you can then reassess and say, well, has anything changed? And let me just ask real fast, has anything changed with this? After I hit my 300 pips right here, would anything change? Well, yeah. Something did change. Something major changed. This AB just hit a 127 extension. That means that we have a new AB. So therefore, the grid trader is going to automatically take off their stop, move their stop here, reestablish the grid, and ride this all the way up. Type in a wire yes if that makes sense. So as you book your 300 pip profit much faster, I mean, there's sometimes that you'll be able to be at break even in the trade, overall, as far as where you got in and the price is still there, but the grid trader actually is up 300 pips, whereas the normal traders break even. And now the grid trader has the ability to reassess and say, well, is this still a trade I want to get in? Do I want to manage it in a different way? So I want you guys to understand this before I show you exactly how I'm going to take all these trades. Grid trading for me is something that I have fully convinced myself that every single trade that I can answer which direction, where to, and where am I wrong, I need to place with the grid. Now, I hope you come to the same conclusion. I've already come to that conclusion. Because from what my standpoint, it's going to do three things. It's going to increase my profitability because I'm going to make more pips. Type in a wire yes if you agree grid trading will make more pips. It's going to increase my probability because I'll book profits, reestablish, and be able to manage my trades better. And it's going to save me time. It's going to do three of the most important things as a trader that I can do. Increase profitability, increase probability, and save me time. Now, How many of you are interested in increasing profitability, increasing probability, and saving time? Every person in here. I got 385 people in here. All of you are interested in that, right? Oh, Terry. Listen, Terry asks a great question. Terry says, will this work in a slow market? Terry, real fast, this works even better in a slow market. All right, watch this. So Josh is going to teach you guys, I'm going to get rid of this, right? Josh is going to teach you guys a strategy that he calls set and forget. It's a no-brainer, like kind of a dummy strategy, really. It's like you don't even need to know anything to do this strategy. Watch this. So let's say this is the grid. So Josh is going to teach you how to establish a formula, do a formula, and essentially with this formula, if you trade within consolidation, and let's say you traded this, and whoops, that's not what I wanted to do. Okay, so let's say you traded this, and let's say that each one of the grids, let's say you set your grids up to be 100 pips wide, right? 100 pips wide. I keep doing that. Sorry about that. Let's say each one of these grids is 100 pips wide, and you wanted to take a 100 pip target. So because the market consolidates 70% of the time, watch this. If you, let's say that price did this. I'm just going to map this out real fast. Type in a wire yes if you could see, okay, I could see price doing that. I mean, consolidating within like a period like that. I mean, that makes some, a lot of sense. I mean, yep, it could go in, and it goes through this kind of consolidation period like this because markets consolidate. It's a slow market where it moves, but it doesn't really go anywhere, right? That happens. So here's what the grid trader would do. Watch this. The grid trader, the grid no-brainer trader, right? The one that's like, I just want to set up a grid. You would buy here, and let's say each one of these grids are 100 pips. So your 100 pip grid with a 100 pip target. Here's how this would work. Now I'm going to go through this kind of quick, but this should amaze you, right? You buy here. So I'm just going to mark all the places, and then you would hit a 100 pip target here. So 100 pip target. Then you buy again, another 100 pip target. Buy again, 100 pip target, 100 pip target, 100 pip target. So you hit a 100 pip target on all those, on all these right here. And then what do? Well, you bought again here. Well, then you fall. Oh, Tyson, you're losing money. You bought again here, bought again here, bought again here, bought again here, bought again here. Geez, Tyson, so you're in all those positions? Yep, watch this. So as price rallies up to about this area right here, we make another 100 pips right here. Why? Because once we get up there, this one's up 1, 2, 300 pips, 200 pips, 100 pips, so that's 600 pips. So this is down. So by the time we get up here, we're up another 100 pips. What do? We go long again. Up another 100 pips. Then go long again, go long again, go long again. By the time we get here, we're up another 100 pips. Type in a wire yes if you understand this. Then we go long again, go long again, go long again, go long again. By the time we get here, we're up another 100 pips. Then what do? Long, 100 pips, long, 100 pips. Long again, long again, long again, long again. 100 pips, long, long. So let me mark all these. So 100 pips here, 100 pips here, 100 pips right in here, 100 pips and 100 pips. So in this example, you would have had 1, 2, 3, 4, 5, 500 pips on that run up, and then you would have dollar cost averaged in, and then you would have had 600, 700, dollar cost average in, 800, dollar cost average in, 900, 1,000, 1,100, dollar cost average in, 1,200, 1,300, 1,400 pips. And the reason this works, this is just an example, the reason this works is because the market consolidates 70 to 75% of the time. So to answer the question of does this work in a slow market, this works brilliantly in a slow market. And Hal says, well, where would your stop loss be? So this is the no-brainer strategy. Josh is going to teach you a formula that you could use, go to any time frame, any chart, any currency pair, any time frame, and he's going to show you a formula where you can just set up You don't need to know how to define direction or anything. You just set up a trade and let it rip, and you've got a 90% chance of making money just by using Josh's formula. Type it a wire yes if that sounds pretty cool and this is starting to say, okay, all right. So you're telling me I can go to any time frame and with this right formula, set up the grid. I don't even need to know direction. Just set it up, let it do its thing, and it's going to win 90% of the time. Yes, Josh is going to show you that in the class. And it has a lot to do with just looking at consolidation. Looking at consolidation, that's it. And taking advantage of the markets consolidating 70 to 75% of the time. Now, I am not going to trade it this way. I'm not going to trade it this way. I'm going to be very clear on that. This is not the way that I'm going to trade it. You want to know why? And this isn't, from my standpoint, in my opinion, this is not the way. This is great. This makes money. But you guys are here to be professional traders, right? Type it in ME if you're here because you're on the path to being a professional trader. Okay. So if we're on the path of being a professional trader, then you guys are getting to the point of being able to answer the 3 questions. Remember the 3 questions? Which direction? Where to? Where am I wrong? So let's think about that. Let's go to the dollar-yen. Dollar-yen. Let's ask ourselves those questions. Well, I've already answered the questions, right? Which direction? Down, right? The direction that we're moving in the dollar-yen, based on my analysis, is down. We're moving down. My stop level, the area that I'm wrong, is going to be at 112.30, and my target's going to be at 107.40. So have I answered the 3 questions? Which direction, where to, and where am I wrong? Yes or no? Yes. So how do I set up the grid now? Now here is how I am going to do it because I've answered the 3 questions. Down to 107.40, and I'm wrong if price gets to 112.30. So the way I'm going to set this up is now I'm going to use Josh's formula. Josh's formula is this. I'm going to go to this is for my swing trades. I'm going to go to a 1-hour chart. This is 500 bars of a 1-hour chart. So 500 bars, I'm going to measure the high to low of the last 500 1-hour bars. We've got 407 pips. I'm going to take 407 times 3 divided by 2 divided by 10. This is the formula that Josh has come up with. My grid needs to be 61 pips wide in the direction of my trend and down to 107.40 with a stop of 112.30. So let me show you how this works. So now I'm going to right click. I'm going to go to matrix, and you guys are going to get access to this today. I'm going to say a grid of 10. I'm going to sell on both sides. If price rallies up, I want to sell as long as it doesn't go above 112.30. If price falls, I want to sell as long, all the way down to 107.40. I want to do both sides. I want to sell it every 61 pips. I want to put my grid. What is my profit potential on this trade? Well, my profit potential is right around 280 pips, right? I'm sorry, no, 380 pips, right? So 380 pips. Type in a wire yes if you agree. Down to 107.40, about 380 pips. So my target on my grid is going to be 380 pips. My stop loss is going to be 112.30. My target is going to be 107.40. So the way that I have this set up right now, every time that when I get into this trade, once I get an overall cumulative 380 pips of profit in, it's going to close my grid and reestablish. So now I've done the formula. I know my direction, I know the area, and I know my stop. In a count of 3, I'm going to hit OK, and you're going to see this grid go in place. And then I'm going to show you what this means. So 1, 2, 3. Done. This is all now set up automatically, automated for me. My job is now done. So let me just ask you a quick question, and we're going to go through this. Does that save me a lot of time? Yes or no? By just automatically having these in the market. I'm done now. My job is done. I know the direction, I know where to, and I know where we shouldn't go to. Now, let's just walk through this. What if price, or I'm going to ask it this way. Could price potentially go like this? Down to my target. Yes or no? Could price potentially look like that getting down there? For sure it could, right? I mean, I don't know. I don't know for sure. But yeah, it could look like that. So what if it does? So watch this. And actually, it'll probably have a couple more waves than that. Let's do this. It'll probably be something like this. Okay, so let's say that it does look like this, which is probably not, probably fairly similar to what it's going to look. Well, here's what the grid trader is going to do. Going to go short here, going to go short here, going to go short here, if this happened. Now remember, every time we get 380 pips of profit in this trade, we're gonna book it. So by the time we get down here, how many pips do we have? Well, on this trade, so right when we get down here in this trade, if somebody wants to do this math with me, actually I'll do it. We've got, on this trade here, we'll have 175 pips. On this trade here, we'll have 120 pips. And then on this trade here, we'll have 60 pips. How many pips is that? That's 350. So by the time we get down right about in here, we have our first 360 pip profit. Type in a wire yes if that makes sense. Right there. Boom. Plus 360. Right? Is that what we're going for? No, I'm sorry. We're going for 380. So I'm going to, by the time we get, by the time we get down here, we got our first 380, plus 380. Right there. That's our first one. Boom. Now we can be done with the trade. Now we can just move on and do something else if we wanted to. We could move our stop. The normal trader that went short here with the stop here and target here, the normal trader is in this trade and pretty happy. The normal trader is up 145 pips and pretty happy. The grid trader has already booked 380 pips and now has a decision to do what they want to do. But let's say you just reestablish the grid and now you go short again here, again here, again here. And by the time you get down here, right here, guess what happens there? Well, you have 180 plus 120 plus right about in there you have your second plus 380 pips. Type in a wire yes if this is starting to make a little bit of sense. So now you have your second 380 pip. Then what do? Well, you're still not done. You have a choice. Okay, now let's reestablish and go short here, and by the time you get down here to your target, you finally hit your last target and you have your last, well, probably right around 380 pips in this last trade. So the grid trader made 380 pips, taking the same exact trade to the same exact level, right? We took the same trades. Trader 1 took the trade right now, put a stop at 112.30, put a target at 107.40. The market went down to 107.40 over the next 3 weeks, and they're happy because they made 380 pips, right? All of you would be happy with that. All of you would be like, oh, that's awesome, cool. But the grid trader, on the other hand, did the same exact trade, but set up the grid and decided to book the profits at 380 every time they get it, and then decide whether they want to reestablish the grid or not. So let's say you did. The grid trader made 380 pips 3 times. So 380 pips 3 times is 1,140 pips. You tell me which one's better, 1,140 pips or 380 pips with the same exact trade. And obviously the 1,100, that's a stupid question, but you know what? Hey, and do you guys understand why this saves you time and most importantly, or one of the most important things, increases your probability of success? Because what if this goes down here and you get your first 380 pips, but then something geopolitically or something changes and you decide that, you know what, maybe it's not the greatest trade to be short the dollar yen. So you decide you're going to kind of sit on the sidelines for now and not reestablish a grid. You've already made your 380 pips, and now you'll have that decision. You can decide to do what you want to do. Well, the normal trader is only up 150 pips, so they're happy, but they're not as happy as the grid trader. So this, my friends, is how I plan on trading in the dollar yen. There it is. Type in a wire yes if that makes sense. Okay. All right, folks, listen, I've got 9 of you in here. I can't believe that we only had like 3 people from the last webinar, but I've heard the pipeline is big, so this is going to be very important. I've got 9 people that are going to be able to get this in your hands risk-free today. Now, we have a lot of trades to go over. You guys got your thinking caps on? I'm going to share this with you today, but we've got a lot of stuff to go over. All right, so here we go. That's my first trade. Here's my workspace. To help you guys set up for 5 to 10,000 pips in May. Type in a me if you want to make 5 to 10,000 pips in May. Here it is. All right, here it is. These are my favorite trades. You can make your decision. The technical trader, the normal technical trader that's just going to have one stop, one target, one entry, is going to make this workspace is going to make between 3,000 and 4,000 pips. The grid trader is probably going to make between 7,000 and 12,000 pips. Yep, I'll be sharing these. My goal is to hopefully convince you that trading this workspace with the grid is the way to go. Let me just ask real fast, are you at least somewhat convinced that trading the dollar-yen trade with the grid is better than trading it just the normal style? I'm 100%. This is how I'm trading it, guys. This is how I'm going to trade. I want to also make something very clear. I'm not changing my stance. I'm not changing the way that I trade. I want you guys to understand that. I am still trading my normal style, which incorporates the longer-term trends, the Fibonacci's and price action. I'm just going to, from this point forward, pretty much take every single one of my trades that I can say, okay, we're going in this direction to this level, and we're stopping. My stop is here. I'm pretty much going to take every trade with the grid, and here's how I'm going to do it. All right, so we're going to go through all of these, so it really doesn't matter which one we start with. Let's just go pound New Zealand first. I'm currently short in the pound New Zealand. I shared this when price was at 87.60. Now it's at 87.30 because this is technically the first live session that I'm on by talking about this trade. I'm going to call it out right now. I am currently short. I'm not afraid to put myself out there. Currently short at 87.30. My target is 81. My stop is 90.50. Now, I'm going to trade it with the grid. Here's what I'm going to do. I'm going to go pound New Zealand, and I'm going to use the formula. Now, I'm going to customize this a little bit. This is just, I don't want to confuse you guys. So I'm going to use the formula. I'm going to take, within the next few hours, these, by tomorrow, these last, like, I don't know, 12 hours are going to drop off. So I'm going to count the range from this low right here to here. So 1,050 is from high to low. 1,050 times 3 divided by 2 divided by 10. My grid needs to be 150. I'm going to say 157 pips wide. So now I'm going to go matrix. I'm going to go grid. 157. Both sides. I'm going to sell. What's my target? How much am I looking to make in this trade? 630 pips, right? So I'm going to drop the trade at 630 pips worth of profit, and then reestablish. My stop is going to be 190.50. My target is going to be 181. I love this because I have the direction. I have the direction I'm trading in. I have the level that I think we're going to, and my stop level. If I have those 3 things, I can then go and do the grid formula. So now, 1, 2, 3, done. Type in a wire yes in the question section if you understand this right here is my trade. Done. You're gonna lose money. So Yower asks, what if our analysis is wrong? You're going to lose money. We're still going to have losses. But the thing is so you got to be able to, and Josh is going to teach you the size technique. Based on your account size, he's going to show you how to size into these, like what size you should use. But if I go up, if this takes a stop loss, I'm going to lose money, right? Just like I would if I took it normal. If I take this trade and I put one target and one stop, we go up and hit a stop, I lose money. If I take this trade on a grid, I'm going to lower my size a little bit, but I'm going to increase my probability of success because the market's not going to just shoot up and take me out of the market. It might wave higher, right? I mean, if the market does this, if the market goes like this, comes close to my stop and then comes down like this, I can probably get out of this trade with a profitable trade and then reanalyze if I wanted to. So you're going to lose money if it goes up and it stops you out just like you normally would. But if it doesn't stop, if it goes in our direction to our level, we're going to triple, double, triple, quadruple our profits, our pips, without increasing our risk. And Josh is going to teach you how to not increase your risk on this trade. Type in a wire yes if this trade makes sense. Down AB. This is just a bearish bias right here because we have this up AB, so we're automatically looking for a 382. But the reason why I'm looking for a deeper move is because, well, the 618 retracement or 618 is essentially the golden ratio. Plus, that's kind of an area. It's what I call a bull-bear battle area. This is an area that the bulls and bears battled prior, and price really hasn't went back down and tested that yet, so I believe we're going to go down and test that. So this is a phenomenal trade. This trade here, from current price, has about 630 pips worth of profit in it. If I trade it with the grid, I should be able to double this. Maybe even triple it. All right, next. Euro Aussie. Here's my trade. Short on a break below. Right now, I am short. I'm in this trade. This is a trade that I like. I like it down to 42.15. That is right around this 618. It's also, once again, right at or around that bull-bear battle area. This is bulls and bears battled out big time, have battled around this area. Most likely that's where we're going. Type in a wire yes if that makes sense. This trade here, how do I do this? Well, I want to get into this trade. I want to save myself as much time, give myself the highest probability. So here's how I'm going to do it. I'm going to do Euro Aussie. I'm going to do pretty close to high to low. That's about 600. I'm going to round that a little bit down, 650 times 3 divided by 2 divided by 10. This is inexact, but I'm going to do a grid of about 100 pips. So now I'm going to go matrix, 10. I'm going to sell both sides, 100 pip grid. I'm going to close my, what is my profit target? My profit target is about 300 and, what is that, 335 pips, so 335. My stop is going to be 147.30, and my target is going to be 142.15, and 1, 2, 3, done. Whoops. Type in a wire yes in the question section if it makes sense why I like this trade. This is the trade that I'm in. This is the trade that I want to be in. My job is done. I walk away and I'm done. Market has been moving up on these trades are not expected. No, well, yes, technically. I want you to see this. So the Euro Aussie, technically speaking, just hit a U-turn area. So right here, type in, actually technically it was looking for a 118 or a 127 extension, but the 1618 on this AB up was right up here. So it shouldn't surprise us. And again, that's a golden ratio number, 1618. So don't be surprised when we hit those levels. So technically, we are sitting at a logical U-turn area in this down AB without a retracement. So they have been moving somewhat against us, but that's just giving us a better opportunity to get in. So anyway, so this is another nice trade. Right here, this trade here, I should be able to make right around 335 pips, trading it normal. Trading it with the grid, type in a wire yes if you understand. My expectation is probably closer to like 700 pips trading this with the grid. I should be able to double it. Okay, next. Euro yen. I'm going to go through these kind of quick, but Euro yen. And then I'm going to let you guys get this in your hands. I'm going to do the fairest thing we can. I believe every person in here, we've got 380 people in here. I believe all of you need to get this in your hands right now. And I'm going to let all of you get this in your hands risk-free. You're going to be able to test drive this for 30 days after the course. And if you don't conclude that this is going to double, triple your profits, then guess what? Get your money back. It's that simple. Nothing to lose. So now let's do this real fast. 700 pips times 3 divided by 2 divided by 10. 105 pip grid. I know my direction is down. I want to do both sides. What's my target? My target is 720 pips. 720 pips is my target. Right? I'm going to sell. My grid is going to be 105 pips wide. My stop is 123. My target is 113.41. 1, 2, 3, done. Having a wire yes in the question section. If you understand, I absolutely love this trade. This trade here. I'm not expecting to make 700 pips. I'm expecting to make 1,500, maybe even 2,000 pips in this trade by trading it this way. I got a lot of you in here saying, how do I get this in my hands? How do I get the grid? How do I get the grid? You guys are going to be able to get the grid. I've got 9 of you in here that are going to be able to get the grid. We only have 9 more that are going to get it for lifetime and 9 more 30-day satisfaction guarantees. So because I have 300 plus people in here, I'm going to go through the rest of these trades, but I want to give you guys, if you're not in this yet, I want you to type in your phone number with the word me. When you do, you will have what's called first right of refusal. You'll jump in front of the line. Doesn't mean you're signing up. Doesn't mean we're charging you. I'll go through all the details at the end. What it means, though, is it means you're going to potentially be one of the last 9 that will get this in your hands for life and have a 30-day money-back satisfaction guarantee. Now, there's only 9 more people that we're going to give that to. After the 9, you'll have to pay a subscription fee for the grid after a certain term, and you won't have the satisfaction guarantee, and it'll be at a higher price. But here's the thing. I want to give you guys, if you've been thinking about this, if you've seen this, if this is something you want to do, you've got 9 left. Right now is the time. I want you to jump in front of the line. Just simply type in your phone number with the word me. I'll go through the details here at the end. But I want to give you guys an opportunity to jump in front of the line and do first right of refusal. So Ian, Terry, thanks. Chris, Jared, Jamie, thank you also. I'll give you guys another opportunity at the end, but I'm just going to go through all these trades real fast. New Zealand yen. Let's do the same thing. High to low, 275 pips, 275 times 3 divided by 2 divided by 10. I know I'm going kind of quick too, but just trust me, Josh is going to teach you all of this. So my grid needs to be 41 pips wide, so I'm going 10, 41 pips. I'm going to buy both above and below. My target on this is up about 250 pips. So I'm going to drop this at 250. My stop is 75, 55. Here's another thing I got to say. If you want to make more pips, if you want to double, triple your pips, then you need to have this. If you want to increase your probability and save yourself time, you've got to have this in your hands. And there's one set of traders. Actually, there's 3 types of traders: target traders, leveling students, and mastermind students that I believe there is absolutely no excuse for you not to figure out how to get this. And not only that, but here's the thing. We're going to let you guys get this in your hands risk-free. Like for 30 days, you're going to be able to test drive this thing out. And if it doesn't double, triple your profitability, then get your money back. It's like a no-brainer. It's about as fair as we can get. But all right, 1, 2, 3, done. My job now on the New Zealand yen, right here, type in a wire yes if this makes sense. I'm looking to buy on a break above here, stop there, there. looking for 250 pips, but on the grid, I should probably make about 500 pips, 600 pips, 700 pips. All right, next. Man, I am giving you guys some great gifts here. This is going to be your best month you've ever had in your life. That's what I want. I want May to be just absolutely amazing for you guys. All right. 812, I'm going through this kind of quick. I'm just going to say 800 times 3. So 120 pip grid on the pound yen. This is one of my biggest sizes, by the way, pound yen. Above and below, I want to sell. My target is, what is that? 500 and we'll say about 550 pips away. So I'll say 550. My stop is going to be 144.25. My target is 137.54. Sell both sides and done and done. Type in a wire yes if that makes sense. Done and done. My job's done. I don't need to do anything else. All right, EuroCAD. Okay, EuroCAD. Again, going through this kind of quick. Let's do the, but I wanted to set you guys up for May. Man, this is really wide. 860. The euros move so much that it's kind of throwing some of these numbers off, but that's okay. 120. I'm going to say 125 pip grid on this. So 125 pip grid, both sides. I'm going to sell. What's my target? My target is down about 400. I'm going to say about 400 pips, give or take. A little less than 400 pips, but I'm going to actually say 100 pip grid because it's moved an abnormal amount in the last few days because of everything that's going on with the French election. So I'm going to lower that grid size a little bit. And Josh will teach you how to do this. Right? I want you guys to understand Josh is going to teach you the formulas and what time frames and all that. So I'm kind of just customizing this myself. Okay, so this is the way that I'm doing it. 1, 2, 3, done. My job's now done on the EuroCAD. There's my trade. Pound Aussie. Pound Aussie. Last but not least, I know the direction. Rough mix of high and low. It's about 1,050 times 3 divided by 2 divided by 10. So I'm going to say about 150 pip wide grid. I know I'm going through this quick, but 150 pip grid. I want to sell it. Both sides. My target is down from current price. It's about 4, 5, 6, about 650 pips. My stop is 173.45. My target is 16650. 1, 2, 3, done and done. Okay, there it is. All right, everybody. I literally, based on this, based on me having the grid, based on me just setting this up, I'm not even kidding you when I say this. If I wanted to go to the Bahamas all of May and just let this thing do what it's going to do, as long as I have a stable internet connection and this thing stays up and going, I'm good to go. Type in a wire yes if you understand that my job is done. I am done. And what is my expectation? Well, let's just do the math on this. Okay, so let's just calculate this together. So on the dollar yen, I am looking for, from current price, because I'm getting in right now. I'm already in all these. So 380 pips. So we're going to take 380 plus, what is this, 4, 650. So I'm just getting rough numbers. 650 plus 390. Right? Yep. Plus from current price 81, 650 plus. These are trades for May. These all should fulfill in May. Plus, this is about 590 from current price. Euro Aussie from current price 42. This is about 325. 325. Euro Yen is about 740. 740. And last, New Zealand Yen is about 250. So we're talking about, give or take, about almost 4,000 pips for the month of May. Now here's the deal. That's a pretty great month, right? It's a pretty great month. But it doesn't, I don't think all of these are going to hit their targets within May. A lot of them might. Within May or June, they will. But what if I could double or triple? What if I could get 10,000 or 12,000 pips over the course of the next month, month and a half? You tell me which one's better. And what if instead of having having 5 out of these 8 hit their targets or make me money, what if I could set this up where 7 out of the 8, maybe all 8, because of the way that I manage it with the grid, make money? And not only that, but what if I was done trading literally for the next month and a half because I set these trades up and now I'm done? Again, I just want to make sure, have I made the point that this increases the amount of pips that I'm going to make on every single trade? This increases my probability of making a profit on those trades, on every single one of these trades, and it saves me a tremendous amount of time. Type in a wire yes if I've made my point very, very clear on all of this. And this is my gift to you guys. These trades, I'm going to share this with you. This is, by the way, I've already shared it with you. You guys already have access to this. Just go to Workspace, open Expert Workspace, scroll down, find my name, and go to Best Trades 427. There it is. There it is. And so I'm excited to give this to you. I don't have a whole lot of time to go into the daily SMA Celt. Maybe I'll do some special sessions talking about that for grid traders in the future. In fact, I probably will, because that Keltner SMA strategy is absolutely brilliant to use with the grid trading strategy. If you don't know what I'm talking about, I'll probably put on some special sessions after Josh is done with some of his sessions for you guys to understand that. Target traders, I want you to imagine something. What if you know that there's a target 500 pips above current price, but the RSI, let's say, is not yet in the buy zone? Imagine being able to set this up and being able to set the grid up to have an alert where you can have an activation rule. And you can say, activate the grid once the RSI goes into the buy zone, and then boom, it automatically enters you in, activates the grid, and you're done. Type in a wire yes in the question section if you're like, whoa, would that be awesome? I'm telling you right now, that right there is like game changing. That is game changing. Let me show you one quick, I'm going to draw this out for you for a second. What if, now you guys have heard me talk about this pattern before, but what if I'm in this pattern right here? Now, I want you to just imagine this happening, right? Because this will, 100%, this will happen. Let's say you're in this pattern here, and you're in this major down AB without a retracement, or with a retracement, I mean. You're in this major down AB with a retracement, and it looks something like this. Right? And let's say you're like, oh, you're so excited to sell this currency pair. But There's something you need to wait for, right? We need to wait for this minor AB to fulfill its extension. Type in a wire yes in the question section if you understand what I'm talking about. So you get really excited about this, and you're like, man, I'm so excited to short this. Oh, I'm so excited. But you then come back to the charts in a month and you miss the trade, but you no longer have to, because right, watch this. I could set this trade up and I could say, enter my grid once price is able to rally to this 1618, establish my grid. And at that point, boom, it establishes the grid automatically for me. It establishes and does everything for me. I don't need to do anything. I can just set this up to say, set the grid once price hits 113.61, target whatever the major extension, and stop above the A. I could set all this up before it even happens, and I can just walk away. And now I don't have to be glued to my screens. I know that the trade's going to trigger once price rallies up, hits this extension. It's then going to sell. I know the exact direction we're heading in, so I need to take the trade. I need to put my stop above here, and I need to place my target. Place my target to the extension, and now I don't need to be in front of my charts. I can let it happen simply by letting the grid get me in and get me out of the trade. Now, if you don't have the grid yet, if you have not taken advantage of this, we have 9 people out of 390 in this room that are going to be able to get it. And I know a lot of you already have this in your hands. So 390 is not a real number because a lot of you already have it. Here's the deal. If you do not have the grid yet, if you haven't decided that you want to get this in your hands, if you've kind of been waiting, the clock is ticking. This is the wait is over. Now is the time. Joshua Martinez is going to teach you 3 core strategies. He's going to teach you a position strategy, a swing strategy, and a scalp strategy. And with these, he's going to tell you how to define direction, your targets, and your stops. But then he's also, on top of those 3 strategies, he's going to teach you 3 additional set and forget no-brainer strategies. Remember the whole, I don't know anything about the markets. I just want to go into a time frame and just set it up and let it do its thing. Josh is going to teach you that also. But guys, I honestly don't want you to be those no-brainer traders. You're going to do so much better, and it's going to be so much more rewarding to be a professional grid trader. Type in a wire yes if you agree and understand a professional grid trader that defines a direction, an area where we're going to, and an area where we're going to take a stop. That's a professional trader. I want you guys to trade the grid like that. Now, I don't think the set and forget is bad. I think it's going to be great, and I think that maybe it's going to serve a purpose for some of you while you're starting to learn. But what I want you guys to do is, obviously, you're here to become a professional. So I want you to challenge you to basically take my challenge. I'm going to offer you guys a challenge to challenge us for 30 days. 30 days. And what I want you to do is I want you to, whether you want to do it with your account, or you want to do it on a demo, I want to challenge you to set the grid up, trade with the grid, take the course, and within 30 days after the course, if you don't double, triple your profitability that you normally would have had, you can get all your money back, because we're going to offer a risk-free satisfaction money-back guarantee. Satisfaction guarantee. But I only have 9 more of those. So let me explain what you're going to get. You're going to get a 4-hour class. The first class is going to be in mid-May, so in about 2 weeks. Yeah, Peter says that's fair. I think it's about as fair as it gets. I don't want you guys to take my word for it. I love the fact that this is a company that isn't afraid to put ourselves out there. I don't want you to just take my word. I want you to be able to prove to yourself, right? And in 30 days after the course, you should be convinced yourself to say, yeah, man, this is awesome. And if you're not, guess what? Then get your money back. And if you think that's fair, then I really want to encourage you to type your phone number in with the word me, because we only have 9 spots. What you're going to get is you're going to get the 3 strategies, you're going to get the class, but then I'm going to give you some bonuses that I'll talk about here in a second. You're going to be able to trade this manually or with the alerts and automated. You're going to be able to set this up on the grid. You're going to be able to set it up exactly the way you want to set it up, let it go, and do its thing. I don't have to. If I wanted to, I could be completely done this month. These could be my 8 trades that I'm taking this month, and I could be completely done if I wanted to. I could be completely done. Now, I'm not going to be completely done. I mean, I do other trades, and there's other things. But if I wanted to, I could be done. Ray says, set me up. I agree. We already have about 4 people in here that have said, listen, I'm getting it right now. Just bought it. So I'm just saying, if you're waiting around and if you haven't talked to your education specialist yet, now is your time. I would go on record by typing my number in, and I'll go through all the details here right now. But here's your expectations. Your expectations should be to amplify your results. To amplify your results means to crank them up. I'll give you an example. If you make 6,000 pips in the next 3 months, as a normal trader, as a grid trader, you should make 12,000, 15,000, maybe even 20,000 pips. If you would like that, then I would simply type your phone number in with the word me. I'd talk with your education specialist, figure out how to get into this, how to make sure you're one of the 9 that gets this risk-free for 30 days. If you're a mastermind student, a leveling student, a target trader, I believe that this is a must-have because this fits right in the style of those trades. It allows you to get in trades, not miss those trades. There's also a set and forget style, a no-brainer style that Josh is going to teach you that wins 90% of the time, where you don't even need to know anything. You set it up and it wins 90% of the time. It's huge. Now here's the 2 bonuses I'm going to give you. There's 2 big bonuses that the next 9 are going to get. And then there's another kind of bonus that I'll talk about also. But the first bonus is this. You're going to get 3 live trading sessions 4 hours at a time. So you're going to get the 4-hour class plus 3 additional 4-hour fill-the-gap trading sessions. Now, these trading sessions, the purpose of them is for Josh to make sure that you're in the right trades at the right time, that you're understanding the set and forget strategy, that you're understanding, when and where to place the grid, how to do the formula, and really setting you up to be comfortable with trading this style, understanding the risk management and understanding the size techniques, all of that. It's very, very important. Those classes, those bonus sessions are going to be great. This is one of the most important bonuses. And I'm actually kind of shocked that we have 9 left, but we have 9 left. This is the bonus from my standpoint that's the most valuable. Now, we are eventually going to what's called a subscription model, maintenance fee model. That means that very soon, if you decide you want to be a grid trader, let's say in 2 weeks you say, I'm going to be a grid trader. Well, that's great. You'll be able to go into the course. You'll be able to pay for the course, and you'll probably get access to the grid. In the course, you'll get access to the grid for probably about 6 months. After 6 months, you'll then be flipped to what's called a subscription or a maintenance fee model. So every single month, to continue to trade the grid, you'll pay a fee. And the reason why we're doing that is because they know guys like me are going to pay that fee. I'll give you an example, Netflix. I watch some series on Netflix that I can't get anywhere else. So guess what? I'm going to subscribe to Netflix for the rest of my life. And Netflix knows it. If there was a way for me to get Netflix for life, I would pay the lifetime fee right now if I could. But you know what? There's not. And Netflix knows it. And they know I'm going to continue to pay it. And Market Traders Institute is the same. They're smart. They know that you guys are going to love this. And for every person that gets this for life, we're actually losing thousands of dollars of future revenue. I want you guys to know this. For every one of you that type in your phone number and get this for the rest of your life, we're losing thousands of dollars of future revenue from you because we know that you're going to love it. And we would actually make more money as a company by charging you on a monthly fee because you're going to love it. That's the reason why we've limited it to, it was 150. We have 9 left. Nine licenses, lifetime licenses left. But it's only for those that type in their phone number with the word me right now. Now, when you type in your phone number with the word me, it does not mean you're automatically signing up. What it means is this. It means you're willing to accept my challenge. Here's my challenge to you. My challenge is this. All I want you to do when you type in your phone number with the word me, I want you to give us 30 days. It's 30 days after the class. And I want you to accept this challenge. If I were you, this is what I would do. I'd say, okay, well, Tyson says I've got 30 days after the class to test this thing out. Tyson's telling me, Josh is telling me, they're saying that this should help me double, triple my profitability. So here's what I would do. Trade your normal style. After class, trade your normal style. Take your normal trades in your account. And then on a demo account, take all those same exact trades, but set them up with the grid. And at the end of those 30 days, I believe you should see the grid having performed 2, 3, maybe 4 times the profitability and 4 times the pips as you performed in your own trading. And if it doesn't, guess what? Get your money back. It's that simple. If you're not satisfied for whatever reason at the end of 30 days, get your money back. So if you think about this, you're either going to give yourself a way to possibly double, triple, quadruple your profitability, or you pay nothing. Now I want you to think how many pips are you going to make in the next year? What's your goal, honestly? My goal over the course of the next year is about 35 to 40,000 pips. Just trading normal style. So if I make 35,000 pips, let's even round that, let's say I make 25,000 pips in the next year. If I trade it with the grid, those 25,000 should go to 50 to 75,000 pips. That is a windfall. That is an unbelievable amount of pips. I've never even come close to a 50,000, 60,000 pip year. But you know what? With the grid, I think I can. So here's what I want to do. I want to challenge every person in here that's not a grid trader to simply type your phone number into the word me. Have a conversation. If you wait to get into this, you're not going to get the satisfaction guarantee. You're not going to get the bonuses, and you're going to end up paying more money. All of this together is about a $5,500 value. But that's not what that's not what you're going to pay. In fact, from my standpoint, the cost of the strategy, the cost of the course is irrelevant, but I'm going to mention it anyway because I want to be full disclosure. But you're going to get a discount. You're going to get a savings of $3,490. Now that's only for the next 9 students. But here's the reason why I believe that this cost of $22.45 is irrelevant. And by the way, we offer financing and vouchers. I don't want any of you to think, oh, I can't do it because of the money. Yes, you can. Here's the reason why this is an irrelevant cost. If somebody comes up to me, and I mean this, if somebody comes up to me and says, Tyson, I want you to give me $100,000 right now, and within the next 30 days to 45 days, I will turn that $100,000 into $200,000, and if I don't, I'll give you $100,000 back. And if I trust that person, and I think that okay, wow, this person's going to double my, then guess what? I'm a fool not to give them the $100,000, even though it's a lot of money. It's like, well, that's a lot of money. It doesn't matter. If they're really going to give me my money back, if they don't make double my money, then guess what? I'm a fool not to take advantage of that. So here's what I want you to do. I want you to really think about this. What if this is everything I'm saying it is? What if this helps you accomplish 2, 3, 4 times more profitability than you're currently getting? But what does that mean to your current lifestyle? I think it means a lot. How fast does that make you become the professional trader you want to become? How fast does that help you accomplish the goals, whatever goals you had getting into this, going on more vacations, quitting your job, whatever it might be? How fast? Only you can answer that. Okay, that's the best case. What if I'm wrong? What if this doesn't double or triple your profitability? What if this isn't what I said, which by the way it is? What if it's not? Well, then you get your money back. Trade this on a demo for 30 days and prove it to yourself. Don't just take my word for it. Prove it to yourself. Prove it to yourself. And remember, I've got 9 more people that once you prove this to yourself, and after the 30 days, once you come to the conclusion that you want to keep this, then you're going to be able to own it for life. You'll never have to pay for it again. For those that are like on the fence and thinking about this, you're going to miss out on the 30-day satisfaction guarantee, and you're going to miss out on getting this for life, meaning when you get this in the future, and I think all of you will eventually have this, when you get this in the future, you're going to end up paying a lot more for it because you're going to have to pay the monthly maintenance fee. That's crazy. Don't do that. So all I want you to do is right now, the only commitment I want from you It's very simple. I just want you to type your phone number in with the word me. That's it. Have a conversation with your education specialist. Talk with them about the bonuses. Talk with them about the expectations. You're going to get the bonuses with Josh. Josh is going to hold your hand and guide you. But most importantly, all this means is you're giving us 30 days. After the course, within 30 days, if we can't convince you that this is everything that I've said it is, if you are like, I'm not quite sure, then guess what? It just simply get your money back and you part and you go back to doing what you're doing now. Nothing changes, right? If this doesn't work in the next 30 days, you go back to doing what you're doing now. But if this does work like I said it's going to, then guess what? A whole lot could potentially change in your life. It's awesome. So I want to thank those. I see, Ralph, you typed in me. That's great. I do see that phone number. That's awesome. Rochelle, I see you typed in me. Perfect. Got your number. Thanks, Rochelle. Felix, I've got your number. Thank you for that with the word me. William, Bernard, Calvin, thank you. Now, remember, I only have 9 more of these. I'm actually shocked we have 9 left. I know we have, there's 17 account reps. And when I left yesterday, when I left the office yesterday, a lot of those guys, I was talking to them about how they're coming along. And a lot of those guys had a lot of students in their pipeline that they were talking to. So I don't know if some of those students were just kind of fell through or what, but I'm telling you right now, if I were you, I would take this time right here in this webinar and I would type my phone number in with the word me. I would go on record in this webinar because I don't know if it's going to be available tomorrow. I do know it's available today. I would type my number in with the word me because if you do, then you're going to have an argument. Let's say that it's not available tomorrow. Well, if you type your number in with the word me today, you now have an argument to say, well, you know what? I was in the webinar with Tyson yesterday, and because I typed my number in, I think I should be one of those that get it for life with the 30-day money back. Now, I can tell you right now, if I were, from your standpoint, if I were sitting in your shoes, that's what I would do. That's what I would do. And so, again, I want to encourage you. I want to challenge you. I want to ask every person in here, if you haven't yet, type in your phone number with the word me. Alice, I'm not sure exactly when the monthly subscription is going to start, but I know that the talk is very soon after the 9 are sold, after the last 9 seats, last 9 lifetime licenses are sold. I'm not quite sure, and I'm not quite sure on the monthly cost. Based on what I'm seeing as far as demand for the product, I'm guessing it's going to be right around $50 to $100 on a monthly basis. So those that don't get this for life, it could end up costing you an additional $1,200 a year to trade this. And it's going to be something that you're going to love. Why would you pay extra $1,200 a year? If you trade for the next 10 years, that's an extra $12,000. No way. But those that get it with the risk-free guarantee, satisfaction guarantee, you're going to have it for the rest of your life. You'll never have to pay for it again. And not only that, but you're going to have 30 days. If we really I could just stop talking right now. If you really just, well, you're going to have 30 days to prove it to yourself. It's not about what Tyson says. Prove it to yourself, right? So again, Eddie, thank you. You have a great evening also. I'm glad you're here. Yeah, absolutely. You'll have lifetime access, Alice. Absolutely. $22.95 for sure. And if you have any questions, and again, Alice has some great questions. Some of you have some great questions. Don't let your questions go unanswered without typing in your phone number. Talk with your education specialist. Worst case scenario is you're like, I guess I can't do it. That's okay. But don't leave this webinar without at least typing your phone number in. Talk with your education specialist, because worst case scenario is you part and say, I just can't do it. That's okay. Best case scenario is we find a way to get you in. We find a way to answer all your questions. And then you take 30 days to prove it to yourself. It's that simple. Okay. So Alice, thank you. Ray, thank you. Ray's like, I'm in. Let's rock and roll. I'm not sure, Jerome. That's a good question. I can't answer that. You'll have to reach out to your education specialist for that. Elaine, thank you. Ralph, thank you. William, thank you. Aaron, Bernard, Felix. All right, everybody, listen. I'm going to end here. I shared those workspaces with you. I called them. What did I call them? Best Trades 427. Guys, May is going to be huge. We're talking 10,000 plus pips for grid traders. We set it up tonight. Get excited. I'm excited for you guys. I'm excited for May, for myself. It's going to be awesome. I'm going to keep this open for a few more minutes, okay? If you haven't yet, all I want you to do is type your number in, talk with us, take my 30-day challenge, see what we could do. Worst case scenario is you part, you say it's not for you. Best case scenario is maybe you double, triple your profitability. It's going to be awesome, okay? On that note, everybody, have a great night. We'll talk to you very soon. I'll keep this open for a few more minutes, okay? Thanks, guys.